Welcome traders. So it is Monday the 6th of May. It is actually a bank holiday in the UK. So and I've just got back to the UK. So just wanting to get this video out today on my day off, and then hopefully get it out to you. So let's have a quick look at what's going on the economic calendar this week. There's a lot of UK market news, predominantly the housing price index, which I'm going to have a look at because I'm just curious to see if we're ever going to get any kind of a shrinking of that particular market. Construction as well, so both the house pricing index and construction together. The interest rate decision, want to see what's happening with that. Still, inflation is definitely an issue in the UK, no doubt about it. And so we're going to have to see what's going to happen with that. This is something that we need to be aware of, that the predominant driver in inflation globally is corporate price gouging. They are refusing to reduce their prices. The initial excuse was during COVID was that there was supply demand issues and therefore prices had gone up. But since then, those issues they've been gone for several years, but the prices have continued to climb. And the problem with this is ultimately it's going to erode people's savings. And so this is something that we're going to have to see this shrunk at some point, and there should be no sympathy for corporations that are doing this. Right now they're announcing record profits, and so really there shouldn't be any sympathy to companies that are doing that are price gouging as well. So this is definitely something that has to correct. It's a bubble and it has to pop. So anyway, just keeping an eye on that. Then we've got GDP again out on Friday, so a lot of UK news. For me, it's interesting. There's mixed signals on the charts. Let's go to the charts and have a look and see what's going on technically speaking. So looking at the volatility index, you can see the market has calmed down immediately, come right back down to the lower levels. So the way that I would suggest we treat this is the VIX here is just saying, look, there's very little volatility in the markets. The markets are not on edge. Now that doesn't, that doesn't mean that that is not an indication that the world is about to come to an end. A lot of people are misinterpreting this and saying, well, the market just isn't aware that the bubbles, that the whole thing's going to crash. That's not the case at all. You very rarely, I think, historically have ever had a market problem without there being signs in the VIX first. So the VIX is a really good indication of the anxiety levels of the market, and it's very happy right now. Then we have the dollar index. So dollar index now at the top of the range, having a bit of a reaction against that. But I would note that on the weekly, it's coming back into the moving averages, back into a previous level of resistance. And therefore, this is a very sensible place for the market to potentially find support. So if we find that this week we ultimately finish higher with the dollar recovering and taking a run up to the top, that would, or just having a bounce off that level, that would actually make a lot of sense. Euro dollar, for example, we are on a downtrend, but this is looking very much as though it would rather wants to go higher. So that's quite interesting to me. Let's just extend the range. Let's just move that along a bit so we can see it. We haven't come down to the bottom of the range just yet. The market is actually, interestingly enough, just looking at the flow of price here, it's looking relatively bullish. So in this particular case, the euro is a little bit stronger than I would have expected. So we have to see how that ultimately is going to play. And sterling as well, just kind of drifting around in this area, but also looking quite bullish at the moment, pushing up a little bit higher, coming into this level of support. We'll see if it finds some resistance. There was a reaction from Friday. So you can see this, just look at the price action here. You can kind of see there was a push down on the Thursday. And then on the Friday, there was the usual wild swings from non-farm payroll, and you can see the market continuing to push up a little bit higher right now. So it's hinting at a slightly weaker US dollar, but also we're seeing a little bit of GBP strength, euro strength as well. Let's have a look at Aussie dollar. So Aussie dollar pushing up towards the top of the range. Again, it's already had a bit of a reaction there. So it's interesting to me. It is a Monday, and Mondays can be funny. You can have Monday do one thing, and then Tuesday for the rest of the week it does something else. So never really be surprised if the Monday is so for example, let's say hypothetically you get a strong dollar on the Friday, then you get a weak dollar on Monday. You could go back to a strong dollar Tuesday, Wednesday, Thursday. Mondays can be really funny, and non-farm payroll, as we've seen, can swing both ways. So you kind of just need to be prepared for all of those. We are at the top of an area. We're also in an area where, but over the next couple of days, we could see a potential reversal in price. Kiwi dollar as well. This is nice. It is in an uptrend. It is looking particularly bullish. So there's still some room for it to head up here. It's got a slightly higher low on the monthly, hinting at that possibility. If not that we're within a range, certainly that there is a possibility Kiwi is going to start to strengthen. Then we have a look at dollar yen. So dollar yen has had a very strong, I've been away, but we had a really strong correction here. This is definitely an issue for the Bank of Japan. They do need that yen to strengthen. They need to change the trend here. So this could be something that we have to deal with this year, that the yen pairs and dollar yen become dangerous to engage in because of potential intervention. We know, I think it was something in the region of 54 billion that they spent last week trying to reverse this direction here. So we'll see. The trend is still intact. It has come back down, producing a bullish candle here. It's still nice and bullish here. So in fact, the trend is so far is still intact. They're going to have to do more than that if they want to see a change in this direction. So, but we'll know over the coming months what the story is with that. Okay, dollar Swissy. So dollar Swissy, this is a little bit different. Here you can see this looks as though there is a change coming in this, more from the fact that we have a deeper correction down to this level of support. We've now got bearish trending MACD. It's not below zero, so that's an additional tick in the box. So it's struggling in this area. You can almost see it's actually range bound. If I mark this with a box, it'll make a little bit more sense. If I just do that, so you can see the box, you can see price stuck within that range. So let's kind of see what happens. And then when you look at it from a monthly perspective, you can see there's an upper limit. However, I stand by my assessment that overall the Swissy pairs are generally, I expect and anticipate them to be very much bullish over the coming months. I haven't seen anything to change that just yet. Still range bound with dollar CAD and still at the top of the range there. So usually when I look at what's going on with the dollar, the US dollar, I look at Euro dollar, GBP, Aussie dollar, and Kiwi dollar against the dollar. I don't so much worry about dollar Swissy, dollar CAD, and dollar yen. They often just do their own thing. They're very much doing their own thing. Dollar yen is completely bucks the trend, and so I don't worry about that too much. All right, let's have a look at gold. Move on to the metals. So gold, really trying to form a bit of a base here. I stand by my assessment that a deeper correction would be better for gold, but here we are. We're going to see what happens. Really what I would be doing, watching the lows and the highs of last week. So basically looking at 2346 and 2277 to see which side we break, because it looks like it's trying to form a swing low and it hasn't even connected with the moving averages, which would make it very, very bullish. And we'll see if that's going to be the case. But again, even if it does that, that doesn't mean it's going to break through 2,400. So just cautious on that. Silver, on the other hand, excuse me, has retraced beautifully. And this one makes more sense to me. So looking at silver, to me, this looks more likely to continue to the upside. Okay, let's have a look at natural gas briefly. Natural gas, again, still trying to turn around here. This price action is trying to turn bullish. It's now slipping above the 50-period moving average. Let's just see what happens to that. Let's move on. Like crude has had a really strong reaction last week. And I can't remember what my analysis of it said, but I think effectively that it had a trend, but it wasn't super bullish or super strong. We have a downtrend on the daily and we have a retracement on the weekly. It's actually in an area where it could still have a correction, which is what the blue box is for. And we'll see if that's going to be the case. But yeah, just... this is one of the, again, this is a great example of how the media and fundamental stuff really messes with people's heads. They're absolutely convinced that, oil is going to head up a certain way. You can, there's so many factors and cogs in the system that work with crude oil. We need to also understand the US is producing more crude oil than it ever has before, which means they're also not as dependent on other countries for that stuff. So it's going to impact the crude oil prices. Effectively, there might even not be a problem with supply, which means prices are just not under pressure. And actually, that is definitely something this year that I'm almost certain the US administration would not want gas prices to go any higher. So almost certainly they will do whatever they can. But from what I understand, they're producing and mining as much as possible, so they're fine. But just look at that particular price. If anything, there's just, sometimes people get it in their heads that crude oil can only ever go up. There's only one direction it can go up. And we just know that that isn't actually the case now. We can see with our own eyes. We also know that we're not as dependent, even globally, we're not as dependent on Russia now. So that's going to take, we're looking for alternative solutions. We also know that commercially and for retail people, people are now starting to look into hybrids. So there's definitely a change. The question really is how much of that will impact it. Okay, so let's move on to the global indices, have a look at that. This is a very strong recovery. It's a beautiful double bottom. Really nice, strong. I remember highlighting that a little bit. It's very good. We've broken up the highs here. The weekly looks good so far. Again, that monthly looks perfect. That is a picture perfect textbook classic breakout and a retest. So that looks pretty good. So far it's supporting the idea that at least on the Dow, the market is getting ready to resume the next leg up. Let's have a look at the S&P. S&P as well, pushing up very gently, very gently. The question mark highlighting here was whether this was going to be it or whether we would see a deeper correction. So far, the market is pointing to the buyers coming in now, feeling pretty confident that this is going to be that area up. And although I am although I am 100% certain we are in a bull market, I accept as well that within a bull market, we will have monthly and weekly corrections, which means over the next 5 to 10 years, as the bull market goes, we will have these big corrections. And during these big corrections, the media will just, flock over it and just announce that market crash is happening and so on and so forth. This has been the way. This is the way it has always been, and it's the way it's always going to be. So really, we're going to allow the technicals to guide us through so that everything actually makes sense. The whole point of technicals is that they just make sense, and they allow you to understand that there's nothing new in the markets. Nothing new. Everything has always happened before, and it'll likely always happen again. And it's very funny, and this is just a little comment that, how often, in terms of regulation, you have to say here that past performance is not indicative of future success, so to speak. But it is interesting, because if there's one thing that is statistically likely, is that the market will do exactly what it's done before. It's just a funny little quirk. The market does tend to repeat itself, but you can't argue that. You can't risk your pension on that. You can't risk your savings on that kind of thing. So you can't say it on paper. But the reality is that almost always, 99% of the time, the market does actually repeat itself. So it's pretty cool. Okay, so let's have a look. So S&P looks good. I'm happy with that. NASDAQ looks good. These just look good. I'll tell you what looks really good here, the monthlies. The monthlies look really good, and that was my big concern. My big concern was that we were too overextended on the monthlies. They look pretty good, guys. They look really good. Let's have a look at what that kind of retracement is. So if we measure this as a fib level, do you have to use fib levels? Okay, what is the most important stuff on your chart? If you strip everything off, the most important stuff is candlesticks and price levels, horizontal levels. You can have those two things, and you can retire, you can still make plenty of money. Once you add the moving averages in, you get organic trend lines, you get other additional information. But moving averages do not trump horizontal levels. Nothing trumps horizontal levels. Then you can add on things like the MACD indicator, your momentum indicators. You can add on Fibonacci. If you want, you can throw in Gartley patterns. You want to throw in, you want to go and throw in sort of waveforms. You can do that kind of thing. And those things are just cherries on top, or a different way of looking at it. Ichimoku clouds, like all those things are just different ways. Bollinger Bands, they're all different things. But nothing trumps just price and support levels, because that's really what it's all about. And so my point is that fib levels are great as an additional confirmation. So if you measure from this low up to this high, we've come back to a 382 retracement, which is all I ever wanted as a minimum retracement. We appear to have done that, and therefore we have ticked the minimum retracement. That's all I wanted to see, and I'm happy with that. Okay, let's have a look at the Russell. Russell's also back out of its range. Remember, that was my thing, was it come back within the range. It's now back out of its range. That looks really good. The range is based off the monthly here. So we've come back into it. Now we're pushing back out. So that's another tick in the box. Let's look at the FTSE. The FTSE is doing very, very well. It's doing really, really well. And in fact, relatively speaking, it's performing, I think over the last year, has probably potentially performed better than the US indices. And I'm talking specifically about when the US markets have had a contraction, the UK market has not had the same contraction. And same for the DAX. These are signs, ladies and gentlemen, of an incredibly healthy market. When the markets are all going up at the same time, it's a bubble, and that's dangerous. When the markets are all tanking at the same time, that's a market crash, and that's dangerous. When the markets are kind of doing their own thing and they've sort of disconnected or uncoupled from each other, that's great, because that means that people are now really looking into individual instruments and determining independently whether there's value on that kind of thing. The DAX, beautiful. Look at this. This is a breakout level. So here is a potential opportunity. You mark this level, and I would say potentially there's a nice move when it does break out of that. The monthly, again, I would have preferred a retracement. As you know, I've stated that already, but this does look good. And again, here's a potential, even on a smaller scale, is that same potential breakout level. I'm going to get rid of this. I don't think this is relevant anymore, so we'll clean that up a bit. We don't have to worry about that right now, but yeah, we'll see how that goes. Let's have a look at the ASX. Also looks good. Excuse me, also looks good. I'm happy with that. That's a very nice retracement there. Look at the wicks underneath. It's good. It's good, it's good, it's good. Again, I would have loved a deeper correction here. So there are a few that haven't had a deep enough correction. I would prefer that. It's fine. Okay, moving on to equities of interest. So Apple, I spoke about looking for the green bullish bar. There we got it. So very nice. In fact, even better than expected. So fantastic. That's really good. And so let's take a quick, I want to show you something here quickly. So we're going to deviate from this. Just give me a second here. Okay, so on my account here, what I've done is I need to do my own personal holdings on this, which is just it takes time. I've got 58 different stocks within the portfolio. It would take me probably several days to update this whole thing. I will do that. Then what I did was I've written articles which I've done on investing.com, and in them I've highlighted stuff that I really like. And what I've done here is when I highlight it, the day I do it, I actually add that position in. And so it's really nice to see that every single one of those is in profit now. And that's a rare thing. I would say that out of every 10 stocks I pick, there's 7 that are in profit and 3 that potentially lag or don't go the right way. So it's about a 70-30 ratio. This is really nice, so don't misread it, but all of these are doing relatively well. But it's a great indication of that. It's 7% since the time I've done that, and that's in the last 2-3 months. So that's very, very nice. And it was really interesting to see in the comment section, to see the criticisms that people have. Either they just didn't buy into the whole idea at all, so they just dismissed the entire process, or they didn't think that there was anything worthwhile about UK stocks. And I understand that. If you want to focus on one market, pick the US. But if you want to diversify, there are just easy stuff to do in the UK, which are potential money-making opportunities. And when I say easy, I mean purely from an experience point of view. I look at a few things and they're no-brainers. They have very strong, healthy trends, and I will cover those in future stuff. I will cover them, but some of them look really, really good. It's a smaller market, but it is also diverse, and there's just, I don't see any harm in that. Then the UK stuff. Oh, so then what I did was on this one, I threw in Apple. So I put in Apple here because I wanted to mark the particular thing, because I spoke about the idea of potentially, and I looked at this one. So this is actually what I did. I bought in here somewhere. And then I said, okay, look, it's potentially going to bounce. We had a pullback, then we had another one, and then we had that response, which is really good. I quite like that. I still think it's range bound. So I think it's just going to go up to the top of the range, and then we will see what's going on with it. But at this point in time, it's performed relatively well, so I'm quite happy with that. And so that one's a net profit. So what I'm going to do is I'll use the investing.com features here to track the stuff that I talk about so that there's a record of it. Because, I mean, the whole point here is kind of putting your money where your mouth is, so to speak. And it's nothing to be afraid of. I don't think this stuff is, these aren't the dangers. I think the, stuff that's highly volatile, chasing cryptos, investing in meme stocks, I think, and investing in popular stocks, I think that's where the danger is. That's where people get conned and they get played, whereas the traditional stuff is, relatively speaking, kind of much safer. Okay, so Apple looks good. Amazon, boom, and it's on fire. That's really nice and bullish. I want to see what happens when we get up to the old highs, but done. So that was really good. So we can see here good response to the markets. AT&T is fine. It's just ticking up. The weekly is really worthwhile looking at here. When it comes to stocks, I tend to look at the weekly and the monthly because the dailies can be so incredibly volatile. You get a little bit of information from that, but you get most of the information from the weekly and the monthly. ARK. So ARK, I expect, will be, I think it's going to get pulled out of the range literally just by the rest of the market going up. It's going to be a rising tide lifts all boats. But, there are certain stocks or ETFs, things where they should be better than they are. Like, they're underperforming, and that is actually a red flag. It's not, oh, well, this thing is misunderstood or it's not appreciated by the market. Their holdings are in other stocks. So in other words, like they basically, as an ETF here, as a hedge fund, for example, as an ETF here, this is made up of other stocks. So it's not like a stock itself. It should be performing better than that. So I'm disappointed. And anyone else should be. There's a nice correction, beautiful ASML, beautiful correction here. We highlighted that as a potential turnaround point. We don't need that anymore, but the point is it was there. We look good. So that's a nice little pullback, which, if we get that shallow pullback and the markets take off from here, it's just another indicator of how bullish the markets are. Glencore, still stuck within its range. Nothing to comment on there. Tesco's looking very nice, trying to push up out of that. It's had some really nice corrections and touch base here, so I love that. That's good to continue on. It's stuck within a range technically. It's got resistance here. We'll see what happens with it, but it looks okay. Amex, to me, Amex is due a correction. So it's losing steam here. It's losing steam here. I think that there's a good chance, and it looks weak here. I think there's a good chance we might see this still come down. 200, maybe 220 for sure, somewhere in that area. It could come down and just tap this level. So I'll just go in and just put a little bit of a kind of there. Maybe we'll just get a bounce there and it'll go. We'll see. But Amex looks so far like it's running out of steam. Berkshire Hathaway. double top. Remember, this is a double top and potential range. So what's interesting to me is whether we find a bit of a base here. So we go and just put that in there. Boom. So does it hold above that and we find we have a range? Does it go? We'll see. Again, a deeper correction, it would be really good for these things. So if you already own these stocks, and whenever you hear me talk about it having a deep correction and then you sweat, you're like, oh no, I've just come back into profit. Those corrections aren't very good. If you don't have those corrections, that's usually a sign you're going into a bubble and you are going to lose all the money. But if you have those corrections, it takes a breather, it's recovering, it's nice and healthy, and then it goes on. So you should never be afraid of those. Those become, if you still believe in the stock, those become buying opportunities. Even if you throw in an extra 20 bucks, that's the idea, or at least, 100 bucks or whatever. Coca-Cola looks fine, up at the top of the range. Okay, BP, so crude oil, you know what? So these will tick over. They've, had record profits, but they're also, again, are still tied at the hips to crude oil in general. So we'll see what happens to those. General Motors, looking good, fine. It just looks like it's trying to break free there. It looks okay. I'm not too worried about that at this time. JP Morgan Chase looks fine. It really would have benefited from a deeper correction. So there's a couple here that would be better off having a deeper correction, yeah. Triple Q, fine, again, would have been better from a deeper correction perspective. So is it possible, could we have some of these ones, like have, of the ones I have here, I have most of them go up while the rest still go through corrections? Yeah. And what does that mean? It means it's a good thing. Again, it means it's a healthy market. Right. So I had the amazing fortune of running into two fixed income, let's call them bankers. They weren't bankers. They were kind of traders / investors, analysts. There we go. I would do that. And I had, one was from Barclays, and they were just, it was an incredibly insightful conversations that I had with them. And it was really interesting. It gave me some real insight into how tough it is for the banks, actually. So some of the banks are so highly regulated and so heavily monitored and so old-fashioned in their structures. Even if one department is making lots of money, other departments are losing money because they're so constrained. And so when we often get the impression, and I didn't get the impression he was lying to me at all. In fact, it made sense to me. He was saying, look, they don't get money because they're owned by shareholders. They don't get money to invest in R&D to go and do new cool things that, banking stuff we need. And the regulation also prevents them from doing the most simple things. When you want to do a search for a mortgage, all of that stuff you should be able to do within your app, but also to see all the different mortgage offers from, different places. In theory, that should all be possible, but due to regulation and due to constraints and kind of just other whole string of stuff, they just don't do it. So when you're wondering why banking stuff is so archaic, and why the newer ones coming up, the smaller new banking ones are so nimble and could do that, it's actually because the smaller ones have not hit a scale yet where the regulation starts to clip their wings. But the big ones are already struggling with that. So it was eye-opening from that perspective, that they get to a certain size, then all of a sudden all the regulation stuff comes into play. They get bought out by a bigger one because the cost of paying for covering the regulation stuff is so massive. It's easier for them to just get bought out by a bigger bank, for example, because that infrastructure is already in place. So then they just buy them out. So that's the cycle that happens. Mind-blowing. So basically, it's not, from the impression I got is banks have more of their own problems that they can't seem to overcome than we have with them. Very interesting. Okay, so Adidas looks fine. This looks beautiful. There's a beautiful correction on Meta. Absolutely fantastic. A deeper correction would still be better for it. I feel that's too little, but let's go with that. Morgan Stanley looks good. It's going to break out. It's going to go higher, so that's fine. NVIDIA, let's have a look at NVIDIA. Obviously, the weekly looks amazing. So the weekly looks really good. The monthly looks problematic to me. So what could happen here? Well, the easiest thing is it could go sideways while the moving averages catch up to it, and then it can go. This is still potentially problematic for me, so we're just going to keep an eye on it. But the weekly looks amazing. It looks really good. Netflix, beautiful correction, right onto the level. Beautiful, comes back, triple bottom. A lot of these look good to go. We are going to have in the next 18 months, maybe even in September this year, I do expect a deeper correction at some point. So we might just get that deeper correction on the cards. PayPal is desperately trying to change around, but it is above the 50-period moving average. So the implication is it should ultimately continue up. It just is really battling there. Spotify looks good. Spotify's going to keep going. We've got the weekly. Spider looks fine. I think that's good. It's pulled back into the range and it's turning around halfway. So that's fine. FedEx having quite a, okay, so FedEx is the only one so far that's having a bit of a correction back in here. We'll see what happens with that. We've got to wait for that. But yeah, that a little bit more surprising. That one should have recovered by now. We'll see. Tesla's obviously had a big stock pump back up into this area. Let's see how it goes. From the monthly, it doesn't really show like it's doing much. So I would just on standby. I would say that there's not enough data at this time to really be able to conclude whether this has now turned around. I mean, here, for example, you could see it's gone above 0 on the MACD, which implies it's more bullish now. That could be the case, but that might be a temporary thing, such as what we saw here in the past. We kind of went above and then went back down. We could see a similar type of thing happen. I'm just going to reserve on that one because we'll see what's going to happen with it. Vanguard, again, the weekly looks perfect. I don't know what to say when the monthly looks like it could go further and the weekly is perfect. So that happens when the market is so bullish. Excuse me, then it won't do that. That looks good. I'm happy with that. Disney looking good. It's in the right place. Right, let's move on to bonds. So bonds are pushing up a little bit higher. There's a potential higher low here. So what I'm going to do is I'm going to just put a line in here to mark from the one low to the other to see if we stay above it, just for no reason other than to see if that's going to be the case. And again, here we've got Eurobond still trying to turn around. Remember that sloping trend line to see if it can break through that. I was saying with the 2, Eurobond looks more bullish. Interesting to see if that's going to be the case. Then we've got cryptos. Okay, so cryptos, nice correction, beautiful correction on the weekly. This looks good. Same thing. It's the same. It's like a minimum correction as some of the other ones have done, which again is that the market is very keen to go back to being bullish, and we're just going to have to see how that's going to be the case. Same thing here with Ethereum. Solana, beautiful correction. This is fine. That's plenty for it to go up. On that one, it looks good. Cardano, also, I mean, plenty. That's undersold. That's like, it's a lagger anyway. And Binance been hovering right at the top, and that was because it was consolidated and it's had a breakout. So this is very similar to NVIDIA's chart structure, so we'll just have to monitor how that goes. Often the way it can get around that is a consolidation before a breakout, and it looks good. So I think, overall the markets are looking very, very good. I still, I want to see what happens as we approach November. The market will have increased volatility as we approach the US elections, US being the biggest economy in the world. And if you think that the election doesn't have anything to do with the charts, it really, really, really does. Be sure that the reason the US economy is the biggest it is because it's also democracy. If it loses the democracy, then things will live in a different world. A year from now, we'll be in a different world. And so be aware that when I talk about politics, I really only do so because it actually will impact all of us. But so far it's all looking very, very positive. It's all looking like we're going to see a smooth, no, not a smooth transition necessarily, but a transition of the existing administration right through for the next 4 years. So that's fine. We're going to see, but there'll be a lot of drama coming up. No doubt there's going to be a lot of drama. We're going to have TV series and movies made about this stuff for the next 20 years, 30 years. It's just going to come out. There'll be series because so much is going on. If you don't pay attention to politics, you need to. This is the most globally anxious we have been since World War II. So just kind of to put you you just need some education on it. Okay, that's it. Ladies and gentlemen, listen, have a fantastic week. It's looking nice and bullish. Keep an eye on those cable positions, GBP. Also, Bank of Japan, keep an eye on dollar yen. Just see what you can hear about what's going to happen with those kinds of things. Equities are looking good for the most part. And again, just be sensible and, kind of follow what the charts are going to say and not necessarily the media, because the media is not your friend. All right, guys, thank you very much.